It was a very humble experience to be over here. Thank you for inviting us. I'm not going to take a lot of time from all of you. What I'm going to do is I'm going to divide my Can you all hear me? I'm going to divide my presentation into 3 parts. What we do, what market is looking at this point of time, and few of you have asked me to address one of the important questions that clients are asking you, that you have not made money in the last 2 years. How do you address it? Do you all facing this question that clients are asking us that I have not made money in the last 2 years? Where is my 12 to 15% return? Are you all facing this challenge? So I'll try to address that. So as a matter of fact, we were the 45th mutual fund to get the license. We are the only mutual fund who does 100% fund management based on algorithms and systems. Which is the biggest example of algorithm is Nifty 50. Every day morning you wake up and see Nifty at 24,000 is the biggest algorithm of India. You buy the top 50 companies of India by free float market cap and rebalance it after every 6 months. You make a 13% CAGR. Now this algorithm doesn't change whether they are performing or not performing. But what is a system? A system is something which tells you 4 answers. Which stock to buy, when to buy, how much amount you should be buying it for your portfolio, and when do you sell it. When you get all this answer together, it is called a system. Remember this because we will be talking a lot about this. Now, there are multiple things I could have done as a fund manager: quality, value, growth, low volatility, equal weight. But we chose momentum as our subject matter because momentum is the biggest wealth creator. Over a 20-year, 30-year, 40-year period, you do India, global, you do commodities, currency, do whatever. The biggest wealth creator over a 200 years of history is momentum. And this is there in front of you as a matter of fact. This is MSCI Momentum Index, the World Momentum Index compared to the World Index. The same is true for the Indian capital market also. So when we saw this data, when value, quality and growth goes right over a 3-year, 5-year rolling basis, they create a 2 to 3% rolling alpha on CAGR basis over a long period of time. But when momentum goes right, it creates a 7 to 8% alpha on a CAGR basis on a rolling basis, which is very big and huge, but it has its own volatility. It goes up also so much, it comes down also so much. So we understand this, and when we understand this, we understand one thing, that if you are buying momentum for a short period of time, you only have a 70% probability of beating the benchmark. But in 2025, it did not beat the benchmark. 23 was very good, 24 was very good, 25 was not good. But when you go higher up in the time in momentum, and you spend 3 years and above and 5 years and above, there is almost a certain 100% probability of beating the benchmark by an 8% alpha, CAGR, every year. So always remember, if you are advising momentum to your client, you should not be investing for less than 3 to 5 years. This is the first learning for all of us. The second very important learning is what happened to the market. So the question was, how do I explain it to our clients? India was the worst performing country in 2025. This is from 2016 to 25 of various countries, Brazil, Germany, India is also there. India is third in a 10-year period. But for the first time, India was ranking last. It has never happened in the last 9 years. India was the worst performing country amongst all this country. So what was happening? The buy and hold strategy which you have sold over a long period of time was working well till last year. Because India as a whole was working, your portfolios were also going up. Either 2% higher than the Nifty or 2% lower than the Nifty. But when Nifty did not perform himself, all the portfolios are not performing. So this is the first thing that you need to show it to your clients, that India did not perform. The second fact is, if you have bought anything in mid cap and small cap, on an average it was down by 25 to 30%. This is the second fact. The third fact, over a long period of time, the biggest wealth creator is micro cap index. followed by mid cap, followed by small cap, and followed by large cap. But in 2025, large cap was the winner, and the difference between large and micro cap was 21%. So if you have identified the winner of 20, 21, 22, 23, and based on that you have invested in 25, you are on the wrong side. But that is fine, because on a 5-year basis, the micro cap index is still the highest wealth creator. So the reverse is also right. So if you see the 2020-21 period, when micro cap goes up, it beats the large cap index also by a margin of 40-50% in a year. So the reverse is also true. So this, what do I mean by this is, there is no country who is an all-time winner. There is no size which is an all-time winner. And these are the ways you can invest into market: value, growth, momentum, alpha, low volatility. There is no style also which is an all-time winner. So when market does well, it is the alpha and momentum index that does very well. But when market does bad, the alpha and momentum index is the worst performer. So what do I mean by this? There is one thumb rule, that there is no style, there is no size, there is no country, there is no fund manager, there is no scheme who can come in the first quartile consistently at all point of time. I am giving you enough time to absorb this. We all want our schemes to be top quartile at all points of time. 1 month, 3 months, 6 months, 1 year, 3 year, 5 year, 10 year. It just cannot happen because it is just not available. If there was some formula year which was available, we all would have taken that formula. So how do I explain this to the client is through this simple example. There is a cycling competition called as Tour de France. It happens in France, where a cyclist has to go through a plateau, then has to take the cycle up on a slope and then come down. And this entire tour is called Tour de France. Thousands and thousands of cyclists has played this particular competition over a 100-year period. There is not a single cyclist who has come first, and then first. That's the combination that they choose, so that by the end of the tour they come in the first quartile. Now, when you understand this, the only difference I want to say is, whenever market is in an uptrend, the percentage of uptrend days are written up. It's the value, or it's the momentum, or it is alpha which creates value. I leave it to your judgment. But data says, when market is in a roaring uptrend, risk on market, alpha and momentum index, which has a very high correlation, is the best performing index. And when market is in a risk off period, then they are the worst performing index. So now with this understanding, so what we do, I have explained. What market has done so far, we have explained. Now what is the strategy? Today we have 11 strategies available. We were the pioneers in creating something called as active momentum in July 23. Now a lot of other mutual funds have started their active momentum fund. I have launched 11 variants of active momentum already. I am on my way to 12th. So only for large cap, only for mid cap, only for small cap, a combination of all market cap, multi-asset, including gold, silver. We have launched all of it. Now, everything has its own benefits and disbenefits. Now, when you talk about momentum as a category and plot a 20-year present, of momentum to the benchmark, the 20-year performance of momentum index to its benchmark, it was only in 2008 to 10, when there was a global financial crisis, that it has underperformed to the tune of 18 months in a row. Otherwise, it has not underperformed. Now, for the first time, after that period, the momentum index has underperformed for 15 months in a row. We are nowhere close to a 2008 kind of a scenario right now. That means this is the best entry opportunity into a momentum index. Whether you choose Samco or you choose any other momentum fund or choose passive fund, the choice belongs to you. But momentum as a category, this is the best performing sector over a long period of time. This is giving you a best entry opportunity at this moment of time. What is the market outlook today? We all are aware of the geopolitical problems that were going on in the month of March. It has cooled down considerably, But the bigger challenge for India is AI, not geopolitics. India being an IT heavy country, a $300 billion IT, export industry that India has, which is a 20% market share to the world economy, is under a lot of challenge because of AI. This war is not going to get over in the next few months. This is a structural war where a lot of us, including a lot of IT giants, will have to shift from an IT heavy service industry to an AI heavy service industry. That phase is going on. The faster we will adapt, the faster we will come out of this war. Now what happens? Just remember this one thing. The biggest learning from all the wars is, if you take any war before this, the leaders prior to the war and the leaders after the war are never the same. A lot of us are reading a lot about war, but nobody is telling us this, that before 2020 COVID period, IT was not in the forefront, but because people started working from home and they realized the power of IT, IT was the best performing sector. But if you are holding IT from 20 till now, you are again the worst performing sector. So the leaders will always rotate. The older playbook that you have designed for your clients, that you always buy where you see value, will also not work from here on. So this is the momentum rank of the top 3 IT companies in India from March 25 till August and for March 25 to April of 26 so far. The higher the rank, the better it is. Out of the large cap companies, the 100 companies, if you rank them on momentum, IT is ranking in the last 10 number consistently every month for the past 14 months. Now when you see this, there are 2 ways of looking at it. There are 2 kinds of fund managers. As somebody was introducing me, they told that I was a banking and portfolio manager with ASK investment before joining Samco. So I have done traditional fund management also. So I'll take that example. When we identified Bajaj Finance somewhere in 2010-11 in ASK, and till 2019, that was the best performing company in BFSI, the best, highest wealth creator. And that led to a lot of outperformance. But from 2019 till 2026, that is the worst performing company in the BFSI segment and has led to the underperformance. So every fund manager goes through his cycle. The question is, when they go wrong, a traditional fund management, how fast can they accept that and change that? Today I can justify value at all points of time, that IT is a lot of value. But yesterday Wipro actually announced a very big buyback, but stock is still down by 3% today. A 15,000 crore buyback was announced in Wipro, but market has reacted negatively. So IT, what I'm saying, I'm not telling you to go out or buy and sell IT. I'm telling you momentum helps us identify the winners and losers very fast. So the older playbook, what is the older playbook? To buy and hold large caps, nifty names and make money in India might not come true in the next 2 to 3, 5 years, because 70% of Nifty is facing their own challenge. BFSI, 37% of Nifty, IT, as I just showed it to you, Reliance and Auto are facing a downward momentum today. So that is 70% of Nifty. So now from here on, it might happen that Nifty might not perform, but a broader index will perform. Like yesterday, Nifty was flat, but mid cap, small cap, micro cap index was doing great. So the older playbook of just buy and hold and sit tight is not going to work in India. Pockets will be there where outperformance will be created. A lot of wealth will be created in smaller pockets of India. You will have to identify them, buy them, but they are outside Nifty. Data centers, capital market, defense, all of this is not part of Nifty. All of this is actually outside Nifty, where a lot of wealth is getting created. So the older playbook requires correction. So this is the third biggest learning from my presentation, that the older playbook is not going to work. So what we are going to do is, we are going to talk about momentum for the next 2-3 minutes to understand. Momentum is to identify the player which is in form. So if you understand cricket, Indian cricket team actually won the T20 World Cup because of the same formula. They identified the opener without naming anybody. They took him in the team. He was the captain of the test team, one-day team. But the moment they saw he's not in form, they took him out. They identified a batsman who was playing well in a Ranji Trophy game, who won the Syed Mushtaq Ali Trophy for its state for the first time, got him in the team. They made him the opener, and when they saw that the opening combination is not working, they got somebody else from, who was already part of the Indian cricket team and is now playing for Chennai Super Kings. And that is where the three of them actually won the cup for us. So if you understand this, you have to identify the players which are in form, allow them till the time they are in form, and have no baggage and have no relationship to their, past performance. And till the time they are playing well, they are finding part in the team. The moment they are not playing well, they get out and they give way to somebody else. Now this is what we do in momentum. We have absolutely no subjectivity in fund selection. That I like this company has done well. If you are doing well, you should be visible in the momentum rank, and then you will be given a chance till the time you are doing well. The moment you are not doing well, you go out of the portfolio and somebody else makes to the portfolio. Similar to Nifty 50. I will select my 50 companies. Till the time I remain the top 50 companies of India by free float market cap, I remain in Nifty. But the moment I drop to 51st, then the 51st company gets the place in Nifty 50. That is also the biggest example of momentum portfolio based on size. We do the same thing. Now what we have understood is that over a long period of time, if momentum can generate so much of alpha, then the similar thing should be true for SIP also of momentum. And we were looking at a lot of data and we identified this, that a lot of you today, thanks to all of you today, that the industry SIP size has gone to 32,000 crores. But somebody 15-20 years behind, similar to me, would have explained you the importance of SIP in quality, value, growth, and then you must have, provided them that support, and then the industry size has gone to 32,000 crore of SIP. But SIP in momentum creates the highest alpha. And so from now on, till the time we are in the industry, I am going to launch a SIP Har Ghar Momentum campaign. Help us take momentum to every household, every investor, and open one folio in SIP for them, because the wars will keep coming and going. But just remember this one thing, that you come at any time frame from 2006 to 2020, you come in any war scenario, whether Nifty is corrected by 50%, 60%, 20%, 30%, 40%, whether you come at the peak, whether you come at the bottom, the XIRR stays similar at 20%. It shows the power of wealth that momentum as a category creates. And when you can create so much of wealth, and the volatility of the stock is always going to be high in momentum, the best way to play momentum is through SIP. And that is what we are requesting all of you to help us create this, buzz amongst the investor and help them take the benefit of momentum as a category. So that's it from my side. A short and sweet presentation. Just want to conclude with the biggest momentum index that we have created so far is active momentum. I launched the category somewhere in July 23. We are the pioneers. People want us to talk about momentum, so I will explain it through my performance. Now this is the performance of my fund from July 23 till March of 26. The dark green line is the NAV for my fund, and the light green line is the benchmark. So from July 23 till October 24, if you see this, the line that I've drawn till October 24, market was in an uptrend. My performance was far ahead of the benchmark. Then from October 24 till March 25, when we saw 20% fall in Nifty, again the performance was better than the benchmark because my equity levels, the black bars are how much equity do I have in the fund. So when the market is trending up, my equity levels are higher. When market is trending down, my equity levels are lower. So in both the time frame, I have done far ahead than the benchmark. Now from July 25, if you see this chart, till December 25, we had a sideways market. Market is neither going up, neither coming down, but volatile within the range. Now that brings the underperformance of momentum as a category. Most of the momentum model failed in the last 6 months of 25. Now, in 2026, come the last 3 bars of 26, we had an upsurge in the market in February because of the India-US deal, and then we had a downfall in the market because of the US-Iran war. Now, in that 3 months also, I have done very well in an upswinging market, also in a downswinging market, and the gap between me and the benchmark has narrowed down to only 2% now. So in a rising market, in a falling market, the momentum strategy does very well. If you have a view that today we are meeting here when Nifty is 24,000, if for the next 3 years we are going to remain at 24,000, then this is not the scheme to invest into. If it remains sideways for next 2 years, 3 years, 4 years, I don't know, you don't know. Today, a lot of data is showing that we are in a risk-on market. Market will go up. But if it remains flat, I'm upfront to tell you, don't invest here. But if it goes from 24 to 30, or it goes from 24 to 20, then this is going to be the best performing momentum fund. I leave it to your judgment where market is going up. According to me, the worst is behind us. 22,000, the low that we have hit last month, is going to be the low till the time the war is not going to impact the market anymore now. Unless and until we break $115 of crude on the upside, markets will not fall. And if markets are not falling, we have enough price and time correction in the Indian capital market for the past 2 years. And it has become relatively very, very attractive. That's why the FI flows have started become positive for Indian capital market. I think from here on, we are going to see a 20-30% Nifty rise in this year itself. And we are going to see Nifty going to 50,000 in the next 5 to 7 years. If this happens, momentum are the best models. But if it doesn't happen, it remains at 24,000, then this is the model to avoid. So that's it from my side. Thank you very much. I can have a couple of minutes of questions if you have for me, my company, my strategy about momentum as a category. One from this side, one from this side, and we can close. Anyone? Nobody? Everybody wants to go home. So thank you very much.
Sir, thanks a lot for those insights.
So there is one question from the management team to talk about my couple of other schemes. So most of the scheme will perform like this, except for multi-asset. Multi-asset that we are doing is truly dynamic in nature. Between January, February and March of last year, when market was correcting, we did 70% gold there. 70, not 17. We are not a static multi-asset who does only 15% gold, 60% equity and balance arbitrage. No. If market is in momentum, if gold is in momentum, we take that much portion of, and we were 0% equity last January, February, March. Today, we are at 20% gold and silver, 60% equity, and we have only 15-20% debt. So please try to understand when you are choosing Samco or any of the schemes of Samco, I'll just sum it up because the question has come up. We are chasing absolute return and we are chasing a market hygiene return. If market is doing well, I am chasing return. If market is not doing well, I am protecting capital through hedging. So that is the fund that we have created, and this is what you will see across all my schemes. So that's it from my side. I hope this clarifies, sir. Thank you.